You know, what's happening right now in the banking system is a direct consequence of bad monetary and fiscal policy. The government and the Federal Reserve caused the 2008 financial crisis. They have caused this 2023 greater financial crisis. Thanks to the government, the entire U.S. banking system is a house of cards. The majority of U.S. banks are insolvent, and because they're all going to get bailed out, and the U.S. government, every bank account is going to be eviscerated by inflation. The Fed is going to print trillions of dollars to bail out the banks and the government, and that means every one of your listeners is going to see the value of their savings collapse as prices go through the roof. You know, they tried to close the barn doors well after the horses had left. The problem wasn't a lack of regulation. It was an excessive amount of regulation that prevented the free market from working, and there was tremendous moral hazard. You know, and by the way, U.S. banking regulations encouraged banks to load up on government debt, mortgage-backed securities, and the Federal Reserve gave them no choice by keeping interest rates at zero for over a decade. We shouldn't even have an FDIC. We had a much sounder banking system before we got the FDIC during the New Deal. But now it's a much bigger moral hazard than ever before. And sure, the cost of deposit insurance is borne by the customers of the bank. It's passed on like any cost. But the real damage is the moral hazard that it does, because Americans don't give a damn about the risks that the banks take. They just put their money anywhere because it's all guaranteed by the government. What we need is a free market to ensure that the banking system is sound. But thanks to the government, it is completely unsound. As I said, it's a house of cards. It's a leveraged mess. The whole thing is going to implode. But what's going to happen is the Fed is going to bail out the entire system. And so you're not going to lose your money. The bank is going to have your money. The problem is your money is going to lose its value. So you can get your money out of the bank, but you won't be able to buy anything with it. So what we are experiencing now, this is the beginning of the 2023 financial crisis, which is going to be a lot worse than the one we had in 2008. In fact, it was the government's 0% interest rate policy and quantitative easing that sowed the seeds for this crisis. Of course, they created the 2008 crisis, and this one is even bigger, but I think they're acting quicker this time around. In the 2008 financial crisis, they raised the limit on insurers' deposits from $100,000 to $250,000, because it was $100,000 before 2008. Now it's basically unlimited. They're going to guarantee all the deposits, and this is a massive bailout for all the banks that haven't failed yet, but which were going to fail during the week and next week if the Federal Reserve didn't step up and backstop all these companies, or all these banks rather, by agreeing to take on all their underwater paper. All these banks are loaded up with long-term treasuries and mortgage-backed securities that are worth considerably less than they paid. They're now able to take that paper and give it to the Fed for 100 cents on the dollar, and that is a massive bailout. It is a return to quantitative easing, and the way Americans are going to pay for this is through higher prices. Inflation is now going to go through the roof. If you thought it was bad last year, wait till you see how much worse it is in 2023 and 2024. If the Fed did the right thing, the market would crash. But the Fed's not going to do the right thing. It has no history of doing the right thing. It is doing the wrong thing. In fact, the reason the markets like the news, apart from the fact that nobody's losing any money apparently, is that the rate hikes are probably off. The Fed is going to stop fighting inflation. The Fed is going to actually go back to creating more inflation. We're going to get a resumption of quantitative easing. In fact, quantitative easing resumed today, because that's the process that the Federal Reserve is able to bail out all these banks, is by printing money and taking their mortgage-backed securities and their treasuries onto its balance sheet. So the Fed's balance sheet is now going to expand, and more money is going to be created, and so we're going to have a lot of inflation. And inflation is good for stock prices, right? It makes prices go up. So the price goes up at the supermarket, but it also goes up at the stock market. But the problem is, I think the prices in the supermarket are going to go up a lot faster than the prices in the stock market. So you may see your stock portfolio go up, but it's not going to go up as fast as your grocery bill or your electric bill or your insurance bills. The people who had money on deposit at this bank, they're the ones that should have lost. But because they got bailed out, everybody is going to lose. And when Biden says your bank accounts are safe, they're at greater risk now than ever before. See, the real threat to your bank account is no longer that the bank fails. The threat is that the value of the money is destroyed through inflation. Every bank account is going to see a significant decline in its purchasing power. What I would do if I had a bank account, I had any savings there, I'd take the money out because it's going to lose value. Buy gold, buy something real. But the riskiest thing you could do right now is leave your money in the bank because you're guaranteed to lose. Look at his own Secretary of the Treasury, Janet Yellen. I mean, she did a lot more to engender this collapse than anything that happened while Trump was in office. But I'm not going to completely absolve Donald Trump for the deficits spending that occurred under his watch. He was helping to create the deficits that the Federal Reserve was monetizing. But the real roots of the problem go back to the Greenspan era and the low interest rate policy that followed the bursting of the NASDAQ bubble in 2001. That was the Fed's major mistake. That's what inflated the real estate bubble. And then they doubled down on those mistakes when that bubble popped and they went to zero and they went to quantitative easing. And then they tripled down during COVID when they just went to QE4 and just printed money like crazy. And we're now experiencing the consequences. You know, the Fed made a deal with the devil back in 2001 when QE started, and it took 20 years, but the devil is now here to collect. Most people don't leave much money in the bank. I mean, take it out, buy yourself some gold, silver, do something, but you're going to lose dramatically if you have cash. If you have a deposit in a bank, it doesn't matter if the government insures it or not. They don't insure you against inflation. In fact, they have to create inflation to bail out everybody else. But at this point, you know, it's too late to do the right thing. I mean, they should have done the right thing 20 years ago, 12 years ago. I don't see any precedent in the U.S. government doing the right thing. Every time they get a chance, they do the wrong thing, and that includes the Federal Reserve. So you've got to protect yourself from this incompetence. I mean, the majority of Americans, as I said, are going to get wiped out by inflation. Now, the government is going to try to blame inflation on the private sector, on the greedy businessmen who are jacking up their prices, or they try blaming it on Putin. But the sole source of all inflation is the U.S. government. It's the government that spends the money and the Federal Reserve that prints it. These massive deficits that we have under Biden, but we had them under Trump, we had them under Obama, all of these deficits are the source of inflation. You don't get anything for free for the government. All government spending has to be paid for. And if you don't pay for it through taxation, you're going to pay for it through inflation. Higher prices are a tax, and every American has had a huge tax increase under the Biden administration.